Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo, not the video, to begin a new month here in 2022. It's November. It's the 1st of November. Let's start with the S&P. Now, the big headline in the video tonight will, of course, be the Fed Day, which is coming up tomorrow. That is the Federal Open Market Committee announcement. That's your Fed Day. That's Chair Powell, and he'll have a press conference after that. But let's not start there. Let's get there through the big picture. Where are we on the S&P? Still downtrending. The big arrow, if we connect off all the dots here, is still to the downside. And we have lower lows, lower highs. Still a bear market. And that's where we'll play or have the game into Wednesday's session. Off of that 3,900, really in the SPX, just that shy of 3911. Similar to prior events where the market has rallied and either turned back down from them to push down to new lows, or in the case of two times where they have gone up on a retracement and then kept going before returning back down. That's what we'll be watching in the markets. The NASDAQ continues to be on the sell side, or the weakness. It was off under 1% today, and in large part because of some of the main technology names. Amazon, they were market laggards today, showed relative weakness. Amazon down 5% to another new 52-week low. Google right behind it, or Alphabet. But then Charter was another name that was off. Lilly, will come to it. It's going to be on the earnings in today's session. But back to the tech discussion. Netflix was a laggard. Apple was a laggard. And so was Microsoft. And these names weigh a little stronger on the NASDAQ. So we'll see that quickly and then move forward. Again, our monsters of tech, which we affectionately call them here in TheoTrade, Microsoft, Apple, Google, Amazon, and maybe we're going to add Tesla into it, some of the other names. Meta has dropped off the list, or shall be dropping off the list. There's Nvidia and some other stocks as well. The NASDAQ is weighted by market cap, as is the S&P 500. But the SPX, S&P 500, is not as weighted or as affected by technology companies. They certainly are, but to a lesser extent. And across the board in today's session, we had more sectors positive. Financials were up. Materials were up. Energy was up again. Crude oil was up about 2%. Was up about 3% in the earlier day, but up 2% to close. And behind that was V for healthcare and U for utilities. Those were the sectors that were up today against the weakness continuing in the NASDAQ. The Dow itself is off that 33,000. And the Russell, which is our small cap, and as we talk about the Russell, it's not affected at all by monsters of tech. It has small cap stocks, not very big market cap, but they make up the Russell. So it was the only index that was positive in today's session at the close of the Big Four. Back to the Russell on the charts. It has a play or a trade potentially down away from just under 1,900 in the index. Again, similar type maneuvers have been, after bear market rallies, have been movements back to the downside in the direction of, again, the big arrow. The big arrow, if I can draw a big arrow, is to the downside. There is a little better drawing of a big arrow. That's just the trend in the big picture. The bond market itself, TLT, does have a potential sell side and sell swing similar to what we saw at the beginning of September or the end of September into October as we start the new month of November. And that does imply that rates, Treasury rates, 10-year Treasury note rate, could be traveling back to the high. Behind it would be the dollar index. And that has a potential to trade up away from this 110. This is an index. And 110, just support level. Potentially back up to the high, as has been the case. Just count them off one time. Almost 2, 3, 4, 5, 6, 7. Potentially the 8th time we've had a pullback or retracement to set up a bull or another trade back to the upside. If you don't trade the dollar index, you can't trade the index itself. You can trade stocks such as, or ETFs such as UUP, or anything else that would have dollar exposure. That's the big picture. That's the uptrend continuing, might the Fed be the catalyst to break the dollar to the downside? And if that's the case, continue the thinking as we pass through Wednesday. But just keep these in mind. Might the Fed be the catalyst to break the yield to the downside? And could the Fed be the catalyst to break the stock market, not to another low, as would be expected, but could it break it to the upside? Let's take a look. In terms of the Federal Reserve, they'll be meeting tomorrow. We have 8 Fed meetings per year, not monthly, but 8 per year. And that's when they discuss the policy, their outlook on the economy. They vote as a board, and they make statements. The chair of the board, Chair Powell, will be making a press conference and, of course, taking questions, giving a little bit more insight into how he and the board think about the economy, inflation, and the Fed's role, about how aggressive means raising rates quickly as they are doing, 0.75 at a time, or maybe if they pivot, if they see that the economy is not able to withstand the higher interest rates, maybe they pivot. The expectation is that they continue down the path of hiking or raising interest rates at 0.75 basis points as we go through the remaining months of 2022. If there is a change, now it will be a fait accompli, or at least a probability, that the Fed will raise the Fed funds rate, the Fed rate, or the overnight rate, 7.5. So 0.75, or we might see the word 75 basis points. 75 basis points of the Fed funds rate. That's what we're looking for, but that is in the cards. We know that to be very likely, 85 or 86% chance that will be the outcome come tomorrow. But what will they say about inflation? What will they say about this word we use? It's no longer transitory. The word we use now is pivot. Will the Fed pivot? And that reminds me of an old Friends, this TV show Friends, Ross and the couch. Pivot. That will be the question or the word we are looking for. Pivot. And that is, will the Fed pull back from their campaign of raising at a clip of 0.75 or 75 basis points per meeting? Might that go to 50? And if that's the case, that would be bullish for equities. That would be bullish for the bonds. Would go equities, bonds. It could be very bearish for the dollar. And of course, bearish for Treasury yields. But we aren't there yet. So until that happens, if they do not pivot, or if they pivot later into early 2023, then we'll see these trends continue, which is lower or weakness for the equity market. For the bond market, lower lows and weakness ahead for the bond market as well. And coming behind that, the Treasury note would be back to the upside. And that dollar index, which has gone stronger through the bulk of 2022, could be making its way back above 114. And that would play into individual sectors across the board. Those are the things we'll be watching just as we get into the Fed funds rate decision. But after that, after the Fed funds rate, we will have Friday, our employment situation, or what we call the jobs report, non-farm payrolls. We'll discuss that later in the week. But the expectation, a little bit lower, unemployment rate and the like. But let's not get ahead of ourselves just yet. The Fed funds rate, their decision, and which will be most likely, almost certainly, a 0.75 hike. But will they make any words about pivot or being a little more, as we might say, dovish? Dovish means not as aggressively with the rate hikes, and any comments about the economy itself. So outside of that, earnings are still in play. Just for the sake of the video, we'll take a main focus on the Fed and how that could play out in the broader world, just in the dollar, yield, treasuries, and equities. But Simon Property Group had earnings today, and they were up on today's session. Eli Lilly, however, they had earnings, and they're down on today's session. Pfizer had pre-market earnings. Pfizer was up 3% in today's session. AIG just reported earnings. and Mondelez. We'll take a quick look, and here's how to see in Thinkorswim what happened after hours. So we'll go to the equities. We'll go to show extended hours. Not a change here for AIG. Mondelez, although it had a burst to the upside, its expected move just quickly is or was about $2.12. That roughly played it a little bit higher, but at the moment it is up $2 from that expected move on earnings. Tomorrow's session we'll see CVS. We'll go back to the daily chart. CVS will have earnings. MetLife will have earnings after the bell. Tech name Qualcomm will have earnings. Booking, and not in the S&P 100, but eBay will have earnings after the bell tomorrow. As always, be careful and safe. The Fed day is tomorrow. The jobs report is Friday, and volatility is here. Be careful, be safe. This is Corey Rosenblum with tonight's Theo video update for November 1st, 2022.